Hello and good morning, ladies and gentlemen. You're with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. Starting with short coverage of the North American markets. Yesterday, the Dow and the Nasdaq were little changed to the negative, a few pips only, with the ongoing series of higher highs and lows in the Dow Jones U.S. dollar. Near-term resilience may gather pace in the days ahead as Fed officials continue to talk about this year rate hike, with Atlanta Fed President Lockhart arguing that the liftoff is very, very close. However, a 2.3% contraction in orders for U.S. durable goods might dampen the appeal of the greenback as it drags on the outlook for growth and inflation. We'll keep a close eye on non-defense capital goods orders, excluding aircrafts, and proxy for future business investments amid the shift in Chair Janet Yellen's outlook for the economy. The Canadian dollar also broke out of its falling corrective channel rather aggressively, taken into the highest levels of 2015. The USD loonie rebound higher, along with other currency pairs that moved in favor of the US dollar as Federal Reserve members signaled a rate hike was still in the works and that global recession was a bigger risk to the US than the US growth. Yesterday's miss on the Canadian retail sales also seemed to help further the move. The events from the calendar today include initial and continuous jobless claims, the new home sales reports, the durable goods orders reports, and also we have the Fed's chairwoman Janet Yellen's speech ahead of tomorrow's GDP data and personal consumption reports. Moving to the European markets have rebounded from yesterday's plunge, with Volkswagen climbing 3.4% after diving nearly 35% over the past 2 days. France CAC 40 is still under pressure. However, most of the companies traded are showing good results on the share trade, and we might be looking at a bullish trend today. Along with the Germany's DAX 30, which has climbed with a few pips amid gains of 26 of its 30 components. We are looking at Lufthansa and Volkswagen lead with gains close to 5%. Apiece, while utility stocks also outperform. E.ON and RWE hold respective gains of 2.9% and 2% as well. The UK's FTSE has jumped 2.2%, 50 pips, with miners leading the rally after struggling yesterday. Anglo-American, Glencore and Rio Tinto have gained between 2.7 and 4.1%. Airlines have also shown strength, with EasyJet and International Consolidated Airlines up 3.3% and 5.2% respectively. Eurozone preliminary September manufacturing PMI 52 as expected, 52.3 previous, and services PMI 54 expected, 54.2. Germany's preliminary September manufacturing PMI 52.5 expected 0.8, 52.8 of course, and then preliminary service PMI 54.3 consensus. France preliminary September manufacturing PMI 50.4 at 48.5 consensus. Services PMI 51.2 expected 51. Separately, and second quarter GDP was at over a quarter expected prior, 0%, even though the European Central Bank keeps the door open to increase the scope and duration of its quantitative easing program. Recent commitments from the ECB President Mr. Draghi suggest that the committee remains in no rush to further embark on its easing cycle as they continue to assess the outlook to achieve its one and only mandate for price stability. In a statement, he was quite positive on the future economic outlook of the European zone. Moving ahead to the Asian Pacific region, starting with the Nikkei 225, which ranged almost 400 points yesterday, 86 points up was the close. For yesterday, opened today with a small bullish gap of 30 points, showing depreciation already. The JPY Nomura manufacturing PMI for September declined with 1.2 points from previous 51.7 and is now 50.9 points. All industry activity index month on month is 0.3% less than previous, now at 0.5%. Asian stocks fell, dragged down by the retreat in Japanese shares as the nation's market opened after a 3-day holiday. Energy and material companies led losses as well. Today, we have the nation's CPI, excluding food and energy, year-on-year for the month of August, and also CPI, national CPI, year-on-year. We have all of the CPI reports coming out today for Japan, so stay alert. Chinese companies have repaid enough of their foreign currency loans that their demand for dollars will drop in coming months, which is helping slow the pace of capital outflows and bolster the yuan, according to Standard & Chartered. The New Zealand dollar trade balance yesterday came out month on month 1.4 billion from 850 million expected. Year on year 3.3 billion from 3.07 expected. Imports again up. Exports are up as well. The New Zealand dollar advanced 0.4% after Frontier Cooperative Group, which is the world's largest dairy exporter, raised its forecast payout to the Kiwi farmers by more than economists had anticipated on Thursday. Australian stocks slumped to a 2-year low after a weaker than expected manufacturing report added to concern about deepening slowdown in China, the nation's biggest trading partner, as China rebalances its economy to shift into a consumption-driven model. That's going to have a disproportionate impact on raw material demand. The mining industry is struggling under lower commodity prices. Australia's economy expanded just 0.2% in the second quarter from the first 3 months and was saved from a contraction only by an uptick in defense spending. Moving along to the commodities markets, starting with the S&P 500 index, which had a range of 30 points yesterday. Currently, the price is 1,935 points. Crude oil stock exchange stockpiles fell by 1.925 million barrels last week. Analysts had expected U.S. crude stocks to rise by 0.5303 million barrels. U.S. oil futures rose on Wednesday after the data was released. Global oil markets fell on Wednesday, with U.S. crude down as much as 3% after the bullish impact of lower crude inventories was offset by large gasoline builds that raised concerns about high autumn fuel supplies. Also waiting on crude were Colonial Pipeline's efforts to fix an outage on one of its lines that had been supporting prices of gasoline at the largest oil complex. All services companies in Europe are finding alternative ways to raise cash and repay debt after falling crude prices made it difficult for them to get funding from traditional sources. Energy companies are being shut out of bond markets, and lenders are reducing credit lines after prices dropped about 60% from last year's peak. The WTI had $2.80 range yesterday. Currently the price is hovering $44.80 per barrel. The U.S. natural gas prices struggled near the lowest level in almost 5 months on Tuesday, as forecasts for warm weather across key consumption regions of the U.S. in the week ahead dampened the demand expectations for the fuel. Natural gas storage change. Next storage report is expected to show a hefty build of approximately 105 billion British thermal units for the week ending September 18th. Gold had a range of $14 yesterday, trading at 1,135 per troy ounce. Silver had a range of 22 cents at 14.85 currently. That was all from me from today. Thank you very much for your attention. Cheers and